Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend in our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Thursday, April 9th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. We were up 1.45% today on the S&P 500 and closed at 2789.82. What we're looking at here is a year-to-date chart of the S&P 500 where each candlestick represents 1 day of trading. And so you can see here over to the right where my cursor is circling, that is today's trading action. And the blue lines, that is the Fibonacci retracements on the entire downturn that we've had from where we peaked on February 19th until we bottomed so far. And nobody knows whether this is going to be the absolute bottom or not, guys. There's no way to know that right now. But so far, where we bottomed is on March 23rd. And so these retracement levels let us know how much of this downturn we've now retraced. Where we finished today is just below this 50% retracement level. So it is important to note that we've had a big drop and a recoil on the back of the promise of trillions of dollars worth of Fed stimulus. So it is important to note that, this has been fueled by Fed stimulus and some less bad news about the coronavirus. One thing I want to point out is I would encourage all of you to go out and Google how many years it takes to consume 1 trillion seconds. Just go out and Google that. It'll boggle your mind, okay? 1 trillion is a massive, massive amount of money, guys, okay? So I think it's important for all of us to understand just how big that number is. So please go out, once you're done with this video, go out and Google how many years it takes to consume 1 trillion seconds, okay? Just want you to understand how big $1 trillion is because it's super important. And this money, this stimulus goes over and above the debt and deficits that we have here in the United States. So just understand it's a massive, massive sum of money. Now, when we look at just today's trading action, what we can see is there was a ton of volatility. This is a one-day chart where each candlestick represents 1 minute of trading, and you can see where we finished here was about in the middle of today's trading session. When we pull back and look at a longer-term chart, and now what we're looking at here is a 3.5-year chart of the S&P 500. Each candlestick now represents 1 week of trading in the S&P 500, and we have the key support and resistance levels that we've been working with over the last couple of months annotated. On the bottom here, we have the 2350. Here's the 2600 that we had tough time getting back above for the last few weeks. And then, of course, now the 2800 level is this top blue line because we finished just below that, again, finishing at 2789.82 for the week. And as a reminder, tomorrow, Friday, is Good Friday, so the stock market will be closed in observance of Good Friday. So we'll have to see next week if this market continues to rally on, Fed stimulus and the promise of things getting better because, again, the global economy is still shut down, right? I mean, millions of people are out of work. We're looking at least, 11, 12% unemployment right now here in the U.S. at this point, and we have no idea how long things are going to be in this state. So, guys, please understand this is still an extremely dangerous environment. So just because we've rallied here over the last few weeks now, please don't take that as an all-clear sign because that is not the case. And also remember that coming into this downturn, we had been seeing global weakness for several years. What we're looking at here is basically that same S&P 500 chart, right, going back 3.5 years, weekly candles. But this black line is an overlaid chart of the MSCI World ex-US Index. It basically measures the globe, 22 of 23 developed countries, over 1,000 holdings, about 85% of the market cap in those 22 countries, and it excludes the United States. So it gives us an idea of what's been going on outside of the U.S., and what we can see here is the MSCI World ex-US Index peaked in January of 18 and has fallen since. So again, we had global weakness going into where we peaked, right? We'd had global weakness for several years, so we didn't have the entire globe participating in the rally like we did back here in 2017. And also the U.S., so this is the same basic chart here, except for now I've overlaid the Russell 2000, which is the small caps here in the U.S. It's a great measure of 2,000 small cap companies domiciled and listed here in the U.S. And what we can see here is the Russell 2000 peaked in the summer of 2018, okay? And it got close to its peak here again at the beginning of the year, but it couldn't quite get back to the highs that it hit in the summer of 2018. And you can also see here that the Russell 2000 started to roll over even before the S&P 500 peaked. So just several different examples of how this bull market that we just were in, right, the longest bull market in history, it was starting to get tired on a global basis. And even in the U.S., right, when the small caps start to underperform like this, we were starting to see this bull market, the longest bull market in history that started on March 9th of 09, we were starting to see that bull market get old and tired and weak to a large degree before we experienced this downturn. So my point is that even once we erase some of these challenges that we're having here, these horrific challenges with the coronavirus, I question how strong the market's going to be coming out of this and going forward, okay? Not trying to be negative, just looking at the facts here. So, please keep that in mind, all right? Don't forget, tomorrow is Good Friday. The market will be closed. Have a good long weekend. Happy Easter, everybody. Stay safe and healthy. And don't forget to subscribe to this channel for ongoing finance, stock market, and success information. And for those of you who like the idea of knowing and understanding the level of risk in the stock market, I will now bring up some more information about simple market signals. Please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to simple market signals. And again, this is just due to international compliance regulations. The Simple Market Signals product is a weekly newsletter that contains our proprietary market signals. The newsletter is emailed to our subscribers each weekend. Our goal is to have the newsletter to our subscribers by no later than 2 p.m. Eastern Standard Time each Saturday. You will also, as a subscriber, receive special midweek updates when warranted. So that is whenever there's a major signal or direction change, and that will make more sense after you go through at least one or two of the videos that we're going to introduce here in just a second. And guys, keep in mind that simple market signals, this is not for day traders. So if somebody has a really short-term time horizon, simple market signals probably is not going to be for you. Simple market signals is for investors and traders with at least a 6 to 8 week plus focus. So as long as an investor or trader has a time horizon of at least 6 to 8 plus weeks that they're focusing on, then simple market signals is going to work extremely well for them. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. So we give you the first 2 weeks so you can take a look at the newsletter, see what we do. If you don't like it, you have plenty of time to cancel without being assessed any fees at all. So we have made this as risk-free for you as possible. If you would like to learn more about simple market signals, I have the following videos on my YouTube channel. I will also leave a link to these videos in the description box below this video. First off is the longest video. It's about an hour long, and it's the Successful Investor webinar. It's the entire story of simple market signals, including my background and why I feel that most people are going to need simple market signals going forward. There's a tremendous amount of market education in this webinar. So I would encourage all of you to go out and watch this because it is extremely educational, and if nothing else, it'll be very thought-provoking when you watch this webinar. So I would encourage you to do that. Again, that video is out on my YouTube channel. I will also leave a link to this video and all of the videos I'm going to introduce here over the next couple of minutes in the description box below this video. Now, if you want something a little shorter, about half an hour long, introducing simple market signals, it has a lot of the same information as the webinar, if you will, but I cut it down to make it fit into a smaller time frame. So it still gives you a ton of information. It's just not as inclusive. So if you're not interested in investing the whole hour, which I would encourage you to do so, but if you want something a little shorter but still very informative, introducing simple market signals would be the video you would want to watch there. And if you want the cliff notes, right, you want something that's less than 10 minutes long and gives you more information about the signals and the newsletter, which of course is how I deliver the signals. My proprietary signals within the Simple Market Signals model are delivered in the weekly newsletter. The newsletter has a ton of really valuable information in it every weekend over and above the proprietary market signals. But if you just want to kind of focus on the signals and the newsletter and what's in the newsletter, you'll want to watch the Signals and Newsletter Quick View, as I call it. And then if you want more information about the process, about what it looks like, when you subscribe, when you go out to the Simple Market Signals website, what does that look like? And it walks you through the subscription process and then what you can expect from there. This video will help you with that. And if you want some testing and you want to see some charts, right, in a video format of how simple market signals would have worked in the 2000 through 03 bear market, keep in mind I worked on the model for over 20 years and it finally came together for me in 2017. So this is back testing, but it's very accurate because I was able to just go back, look at the charts and figure out with the model where the signals would have kicked in and where the signals would have changed. So if you want to see the back testing I did on the bear market from 2000 through 03 and how simple market signals would have helped you, the video here, S&P 500 2000 through 03 using simple market signals, is the video you will want to watch. And then I did the same thing for the 2007 through 09 bear market. So again, there's a video on that. I started using the model in 2017, and of course 2018 was a pretty tough year in the markets. The markets were negative that year, and if you'd like to see how simple market signals could have helped you in 2018, I've made a video on that as well. Again, all of these videos are out on my YouTube channel as well as linked in the description box below this video. And if you'd like to know more about my background, I have a video titled My Financial Services Background. It's about 3 minutes long, so pretty quick video, but it will give you my backstory. And I would encourage all of you to watch that video as well. And of course, if you'd like to go out to the website can be found at https://simplemarketsignals.com. And that is the website you will need to go out and subscribe to Simple Market Signals and receive our weekly newsletter, which will include, of course, our proprietary market signals.